Hello, I'm Bernard Hickey from interest.co.nz and welcome to a special investing report brought to you in association with the BNZ. The next 2 days are going to be two of the biggest this year for investors, homeowners, income tax payers, people who buy stuff with GST, in fact, just about everyone. Tomorrow, the Reserve Bank will be releasing its financial stability report. It comes out every 6 months. Now, this doesn't seem on the face of it very important, but it is, because the Reserve Bank has changed the way it approaches bank lending and bank prudential management over the last year and a half in a way that has frankly changed the economy to its core. The Reserve Bank has put in place a core funding ratio for the banks. This is forcing the banks, although to be fair they are going down this track as well, forcing them to raise their money from mums and dads in the local market or through long-term bond issues. It doesn't seem overly important, but it is, because in the past the banks went out into the hot money markets, international money markets, and sucked in money from the rest of the world to lend to us pretty cheaply. Now the stuff they borrow from us here in the form of term deposits and from these long-term bonds is more expensive and it's harder to get. So that means the banks are having to push up their costs of funds and therefore push up interest rates for both term deposits and mortgages. And they're being a lot more cautious about how they lend to businesses, to farmers, and lastly, to homeowners. Now that is pressing down on the economy. It's inevitable as New Zealand deleverages, as it starts to repay some of its foreign debt. It means the economy is going to grow slow. It's going to be harder to get money from the banks. The housing market and house prices are going to be flat or, I think, falling. And what the Reserve Bank says on Wednesday about the core funding ratio, the health of the bank lending process and how that's all going will be important for the economy. There's a lot of political pressure growing on the Reserve Bank to have another look at this core funding ratio. Meanwhile, on Thursday we get the budget, and it will be the biggest in a generation. One of those Muldoon type budgets where everyone's looking. For a start, we're likely to see some cuts in personal income taxes. We don't know exactly how much, but there will be some cuts there. Some of which will be to offset the effect of an increase in GST. The other thing people are watching for is changes in the rules around taxation for property. Now the suggestion is there might be an imposition of ring fencing of losses from rental properties against incomes. We might also see the introduction of what they call a bright line test on property trading. You do actually have to pay capital gains tax if you're a property trader at the moment. But a lot of people say, I'm buying for the long term, therefore you don't need to tax me. The government may impose a rule that says if you buy and sell within, let's say, 2 or 3 years, you're automatically counted as a trader and therefore you have to pay trading income. There may be some other changes in the way that depreciation is calculated for tax purposes on buildings. And rental property investors are nervous about this. And we've seen this in the ASB Investor Confidence Survey out today, showing that investor confidence in rental property as a class is down to 17% from 18%. That's in terms of which do people prefer most. Term deposits, meanwhile, are up from 12% to 16% as interest rates look to increase over the next couple of months. The Reserve Bank obviously pushing up the official cash rate, but also the banks having to push hard, remember the core funding ratio, having to push hard to get term deposits. I'm Bernard Hickey. That was a special investing report brought to you in association with the BNZ.